Good afternoon, everybody. Welcome. My name is Anthony Vulin. I'm the National Vice President of the LGBTQ Real Estate Alliance, and welcome to my home, The Collective. Happy to have you here. Today, we're going to be talking about the 2024 California economic and housing market forecast. So, what the heck is going to happen next year with real estate? There's been a lot of predictions, I'll tell you, this year that haven't really come true from top economists. They've been altering their predictions just after the second half of the year to determine what's happening this year. So it's a fast changing market, but we think we're kind of getting to a level point that you'll see, and the predictions that they have are pretty solid. So let's go over what's going on. So right now, the strengths of our market is the market's not crashing, right? We're not seeing prices drop like crazy. People like, when are prices gonna drop 20%, then I'm gonna buy. It's not gonna happen. Prices are stable, or in most cases, they're gonna close. Home values will be higher at the end of this year than they were at the beginning of the year. So almost every economist predicted that they would be lower because interest rates are rising so quickly that they're like, what's going on? But prices are still rising because there's not a lot of supply. So some of the weaknesses are affordability is super high because prices keep going up. So it's becoming more unaffordable for more people. Also, the rates are expected to remain elevated at least through probably summer next year. We thought by the end of this year, that would be the highest, right? We think now they're gonna kind of level off and stay like this for at least another 6 months or so. Good thing is the economy is doing amazing. Homeownership is still super desired. People still want to be homeowners. They understand that being a homeowner is the #1 way to build wealth in our country. So people still want to do that. There's still that huge demand. Yeah. Some of their challenges is there still could be a recession. That could happen sometime beginning of next year. It'll be a light recession. It's not really going to affect our market too much. Supply is super limited, right? I think anyone who was a homeowner who had a good realtor or mortgage person refinanced a couple of years ago when rates were around 3%. Some people even got a little under that. So right now, about 70% of people who have mortgages have a mortgage at like 3.5% or lower. So if you're buying now, the rates are around 7.5%. You're gonna have to step up in your rate. Plus prices are going up, it's more expensive. So unless you're doing really well in your career and you've got a great raise, it's really hard for people to move even to the same price home across town. And then let alone move up to a bigger home. We're just not seeing that. There's not a lot of movement buyers. So that's why our supply is really low. People are remodeling, adding ADUs, especially in LA, but they're not selling. So last year, we had about 440,000 homes closed in California. This year, it's expected to be 260, almost half, 50% down. There's more realtors than there's ever been, and there's less homes for sale. There's over 200,000 realtors in the state, so that's about one deal per realtor. So if you're a realtor, that news is not so great. You really have to step up your game and network, and keep that going. You have to do everything possible to get one deal. So reasons to be optimistic is where we are in the low market. If you can see the shaded areas, this is over time since the 70s when it's been over 6%. So almost always it's been over 6%, except for the last 7 years or so, it's been a little bit under. So we probably will end up somewhere in the gray area in the 6s and probably stay in the 6s for a while, at starting hopefully sometime next year. Also, we haven't quite hit our winter lows of last year when it was a really, really slow market. This year, the amount of deals that are closing second half of this year has slightly gone up. We'll see what happens this winter, but it doesn't look like things are getting worse. It looks like they're getting a little bit better as far as the amount of properties that buyers are able to select or the amount of properties available for a realtor to sell. Like I said earlier, people still believe in home ownership, that it's the #1 way to build wealth. There's so many studies that always show this. I mean, this is an example, right, of just a couple of years ago, if you were a homeowner, your average wealth was over $250,000. It's for the state in LA, it's a lot more. If you're a renter, your average net worth is about $6,000. So, and these are people who are making the same amount of income, $6,000 is the net worth of an average renter, who's making, say, $100,000 compared to a homeowner who's also making $100,000. So it's not that the people who are homeowners are making more money so they have more net worth. It's not that. It's all leveled out. So that's pretty interesting to see. Do you want to be a homeowner? You can see, absolutely yes, it's still in demand. Over the last 5 years, when we asked people no, even this year, the highest year was, 2021, like in the middle of the pandemic, when they're like, I don't know about that, and rates and prices were going up so fast. But right now, over 80% of people still believe in home ownership, so that's definitely a very good sign. Delinquencies in the market, foreclosures, we're still at half of what the historical average is, so we're really low. So if anyone tells you that the market's going to crash, there's going to be a lot of foreclosures coming up, we still have room to go just to kind of get to an average level. It's not going to happen. That's not what's going to cause the market to go down if anyone's waiting. There may be more foreclosures that come on slightly, but they're going to sell at market rate because there's no inventory. They're not going to be deals to be had. So we're not in that same type of situation as we were in like 2008-ish, around there. This is all California data. Yep. Homeowner equities still at an all-time high, so that's why a lot of foreclosures and short sales aren't going to happen, because people have a lot of equity. They can sell if they have to sell and still walk away with money. Median home price, it's just, okay, so the gray is last year. That's when we hit the highest home value price. It's gone, it always goes down seasonally and then back up. So last winter, it starts to go down as of pretty much like I got married last year in April. I always remember after April, the market started going down for home values. And then now it's starting to go back up a little bit, but it's definitely, this year is definitely going to close where home values are higher than they were at the beginning of the year. We continue to see amazing job growth, so that's definitely something that's keeping our market really strong. Mortgage rates are likely to remain elevated, this year. So this was just last month, this data. September, it was 7.19. We're at what now, 7.5. You might want to check with the lenders outside, but I think they went down a little, maybe 7.25, but they're around there in the sevens, and they expect to kind of be there for a while. So, and then we see buyer demand as far as who's applying for a mortgage. And, over the last several years, it's been pretty high, but since COVID to 2021 going down, we're at the lowest levels of buyer demand. So there's not as many buyers in the market. So you don't have as much competition. We're not really seeing multiple offers on every property like we were, which was on an average of 20 offers per deal. Now some properties will have multiple offers, some of them won't. Some will sit on the market for 3 months, some will sell the first week. So it's something that you kind of have to look at that neighborhood to evaluate. But the demand is definitely down. But like I said earlier, there's only half the amount of properties that are closing. So there's still more demand than there is properties available.
What's MBA? MBA.
What?
MBA. What is that?
So the supply collapse in there somewhere too?
What did you say? Did supply?
Yeah, I mean, in the general markets.
Oh yeah, basically since 2021, that's when everything really started to change, when rates became so low. Because when you have rates so low, there's no way that you're gonna refinance going forward, for a while. And the rates were so low that, where we are now with rates of 7.5%, people just aren't selling. So supply has been continuing to drop.
Can I get a answer to my question?
Yeah, I'll get it.
So what is MBA? Sorry.
So these are mortgage applications.
Right, but what's MBA?
I'm not sure what exactly.
Mortgage Banker Association.
Maybe, yeah.
Mortgage bank.
Banking.
Yeah.
Yeah? Okay.
Okay. So we still have a lot of inflation that's happening. It's getting better and better and going down. We need to get it down to around 2% to kind of be normal. So if inflation is still high, there's still a chance that the feds are going to keep increasing interest rates, and it's still going to be rough for a while. The last cycle, the feds kept them at 0, but the next cycle, they may actually raise them again. We'll have to kind of just wait and see what happens with inflation. People are still buying, but the thing is, people's credit cards are starting to fill up. That hasn't happened until second half of this year, where their credit cards are filling up, so now people are like, oh, I need to really pull back on buying. And when they start pulling back on buying, then we're gonna see inflation come down, we'll see interest rates come down, we're gonna see job losses and the economy not do as well to kind of balance things out. So that's what our government's trying to get us to have not as great of an economy as we are right now, so things could be more level. It's kind of crazy, but that's the way it works.
This is gonna increase the supply of housing.
No, that's another story. Increasing the supply of housing, yeah. At some point, if rates go down enough, then yeah, people will start selling again. But our inventory, right, that's our biggest challenge. We have very little on the market. I mean, look at the spike, the last recession that we had. There were so many properties on the market. Things were on the market for over a year on average. Now we're on the market an average of less than 2 months. So things are going super quick. There's just very little inventory. In California. Yeah, all of this is California. I think I mentioned this earlier, about 70% of people have interest rates that are under 4%. So it's hard for people to buy something new now at 7.5%. This one is really interesting too, where people are staying in their houses longer. The average time has been the longest that we've ever had. People are staying now, as of this year, 12 years. For so long, the average was 5, and then 7 was the norm. Now we're up to 12. So if you're a realtor, that means that about 8% of your database, 1 divided by 12 is about 8%. 8% of your database who are homeowners may sell in the next year. So if you have a database of, calculate how many people, how many are homeowners. If you have a database of 100 people of homeowners, maybe 8 people may sell. So it's still a decent amount, right? That's where we're about. I think next year it's gonna go even higher, because I don't think people are gonna continue to sell over the next year because the rates aren't gonna change that much. So it could get even more narrow.
So it's 12 and 23, 12%.
Yeah, this year in 23, it's 12 years. People are staying in their home on average for 12 years. Yeah, I said 8%. That's the percentage. That's 1 over 12. California residential permit activity. This is our needs in order to keep up with population, the yellow line. Since 2007, because of the last recession, we just stopped building. And that's why prices have gone up so much. We're way, way, way below. We're increasing, we're doing a good job, and there's a lot of state and local rules saying you have to build a certain amount of number of housing. In order to get certain money from the government, you have to increase housing, or you just don't get certain funds. So people are being forced to build, and if cities don't want to build, they're getting sued from the state. And there are some cities that haven't met their quotas. So we need construction, we need housing to be built. Otherwise, things are going to be so unaffordable where people aren't going to be able to live in the areas where they work. They're going to live farther. They're going to have more commutes. Traffic is going to be worse. It's not a good situation. We need to level off home values to kind of make that happen.
What about manufactured housing? Is that likely to boost?
Yeah, manufactured in certain areas. We're getting a lot of modular homes being built. A lot of ADUs, which we'll talk about in a minute. That's also going to help the housing stock. So this is all, again, just to prove, say 1988 versus 2022. California population has gone from 28 million to 39 million. California jobs from 13 million to 18. And then when you look at the amount of homes being built, 256,000 versus 130. So it's like we're increasing jobs and population and everything, but we're not building. So it's making us one of the most expensive states to live in.
Why aren't we building?
We're not building for so many reasons. I mean, construction costs are up so high, but a lot of reasons is the neighborhoods are putting up huge fights to not have any construction built anywhere. They don't want a new apartment building. They don't want a new condo building. We need that density in a lot of areas, and it has to be done right and be built, I think, along some of these main corridors where we just have strip malls. It really should be mixed use, where it's commercial on the bottom and 5 stories of condos. So people still complain about that, and then it delays things for 3 years and costs money, and people don't end up building. CEQA, there's a lot of like red tape as well from the government, things that are happening too that cause us not to build. But we have to build. So if you're a realtor, you know California Association of Realtors, we're always fighting for increasing inventory and building because we have to have a sustainable market for people to live in. Okay, so this is super interesting too, right? There's a lot of education that needs to be done with the general public. We always talk about the brother-in-law effect where somebody's telling you who's not a realtor, not an expert, what's happening in the market and the market's gonna crash and all this. If they're not an expert and it's not their job, don't listen to them. Who knows where they're getting that info from? Maybe fake news, who knows, but it's probably not right. That we all need more financial education. But this is, look at this, right? This is a question that was asked. What percentage of cash do you need to purchase a home? 19% of people think you need 50% down. 26% of people think you need 21 to 50% down. 33% think you need 11 to 20% down. So about 80% of people think you need at least 10% down to purchase a home. Most of them think you need more than 20. 0 to 10, only 22% of people think that's what you need. Well, we all know we have amazing vendors out there. If you don't know, you can buy properties for 0 down. If you're a first-time buyer and have a certain income requirement, you can purchase with your closing costs being paid for. FHA loans are 3.5% down. You can buy a duplex or a fourplex with FHA loans with 3.5% down. And there's so many options to purchase under 10% that people aren't aware of. They think that I can never save up a 20 or 30% down payment. And maybe they can, but they could purchase a home with 3.5% down and afford the mortgage and get all the benefits of home ownership and building wealth and having all the amazing tax write-offs that you have. And if you have income property, even more tax write-offs. So it's a pretty incredible opportunity.
What percentage of, say, FHA homes or other advantage homes like that in Los Angeles?
I don't know what percentage. Probably the lenders out there could tell you who uses that. I know we see maybe in our office about 10%.
Is it meaningful to look for an assumable mortgage in this climate?
No, I think assumable mortgages are super rare. FHA loans are assumable, but you're probably not going to assume that much of a loan to make it worthwhile. And there's not that many out there that are selling, but it is possible. So, yeah.
When it is real,
yeah.
Is it real enough to attract most people?
Yeah, so what this is saying is just what people think. They think that you need, 22% of people think you need 0 to 10%, but most people think you need a lot more
Not
down.
wrong necessarily. If you're a veteran, you can get a 0 down.
That's right. But I want this number higher. This 22 should be 100. Everybody should know that it's possible to get loans that are 0 to 10% down. Out migration, right? We heard this for the last several years. Everybody's leaving LA, everybody's leaving California. Guess what? It's switching the other way. Less people are leaving now. I've had clients who've left to go to Texas, Tennessee, and guess what? They're trying to come back. So let's see what happens, but that out migration is not as strong as it was during COVID.
What is same county?
The amount of people that are moving within the same county. So that number's going up. More people are moving within LA. If you're gonna move, you're not leaving the state. More people are starting to stay in LA or whatever county they're in. Again, this is all of California data. The average first-time buyer percentage, the amount of people who are first-time buyers is 36%. That's about where we're at right now. About a third of the market has always been first-time buyers, so that's a healthy sign. Cash buyers, look at how much that's gone up. Almost 30% of people who are purchasing a home right now are cash buyers. Some people are saying, oh, everyone who's buying a home right now must be a cash buyer. No, about 28% of people are cash buyers. Honestly, in our office, we don't see that very often. I would say it's probably even less than 28% of the deals are cash buyers. So if you're looking to purchase a home, you're not always competing with cash. If you are competing with cash, there's strategies that realtors have to make your offer as good as cash. You could write a loan with no loan contingency if you get all your paperwork in. Marty at Arcstone, who's out there, is amazing with this. He's done it to many of my clients, where you can write a deal with no loan contingency and compete with the cash. So don't be afraid of cash. About a third of...
But does that say anything? I mean, does that that number high because it's hard to get a mortgage?
Yes, the number is, the number's high because the mortgage rates are higher. So there's less buyers that are available.
Would you say it's extremely high or just
It's
high?
a little bit higher than it's been. Not extremely high for sure. Yeah. This one is really cool. So ADUs. We have not seen people build ADUs until the last year. Before that, there were very few people. It's so expensive, you couldn't get a loan. Construction costs were high. It was a dream. Like we thought everybody would build an ADU, but no, it just was not happening. But now Los Angeles is the one county where people are actually doing that. In the last year, about 27,000 people have built ADUs, and we need a lot more than that to go up. So you can get a loan for it, and they're not as expensive as they were. Pretty much every property qualifies to have an ADU or a junior ADU. A junior ADU means you have an attached additional unit to your building. You can actually build an ADU that's detached plus an attached ADU to your house. If you really want to have income coming in and you need that, or you have a mother that's wanting to come live with you, you can build 2 units on every lot. And depending on what it is, you can
Depending
build.
on size of the lot.
Yeah, if it can fit, right?
Yeah. I'm gonna ask them.
Okay.
I heard one more thing, sorry, that you can cut the property in half,
Yes.
keep the main house, and make 2 more acres.
Oh yeah.
More acres.
If you guys want to see seminars on SB9, go to the Collective Realty on YouTube, and we have several seminars just on SB9. You can divide your lot, and literally, so you now have 2 lots, build another house and sell it, and then live in the front house, and you make all the cash for the back house. It's a cool thing.
Yeah.
Okay, these are my last couple of slides. I'm just about out of time. But the economic forecast for this year basically is that our economy is still going to be growing. Unemployment is 3.7%, which is really low. Next year, it might be a little higher, 4.6. CPI, we're hoping to get it around 3.9 by the end of the year and into the 2s next year. I think this number might be a little lower. We might be a little better. If we have a lot of spending for the holidays, it might go up, but something like that. But next year, we're hoping that it's going to go down where we need it to be. Consumer price index, yep. Population growth, pretty much 0 the next couple of years. But not negative, right? We're not losing people, we're staying consistent. People are leaving, people are coming. Unemployment is gonna go up slightly next year is what the prediction is. The next slide is the whole summary of what's important to real estate market. If it'll come. Okay, so like I was saying, the amount of homes, the top line is the amount of homes that have been sold over the last few years. 2021 was 444. 2022, 340. Oh, I felt it, I took a big hit last year. This year, 266, even more down. I'm really hurting this year financially because as a realtor, because there's just not a lot of homes to sell. Next year, we hope that it'll bump up a little, but it's still gonna be worse than last year. So we have a ways to go if you're a realtor for the transactions to come back up. It's gonna be a tough time for the next couple of years. And if you wanna have a huge variety of homes to look at as a buyer, it's not gonna happen. Median price. Right, our home values crashing, like we said, are they going down, going up? This year, we expect them to close at around 810,000 as a median price for California. That's on average about 1.5% down for the state. This is changing, this is gonna go up. So this data was from a month ago and it's already changing.
Percent change in price.
Yeah, percent change in price. Housing affordability is gonna stay the same at about 17%. That means 17% of people can afford to purchase a home right now. That's really low. Look at, we were in the 30s before COVID. Even during COVID, it's dropped a lot. So it's a very difficult thing to do. So 2024, we expect prices to go up 6%. Prices aren't gonna crash. I told you all the reasons why. Prices are gonna go up by the end of next year by 6%.
Interest cost is going to rise fairly substantially.
We're hoping that interest rates are gonna go down next year. So 30-year mortgage rates, 6.7%, right? That's what they expected it to be a couple months ago. This slide's from last month. That's already gonna be wrong. It's already gonna be in the 7s. I guarantee you, we're in the 7s now. It's not going below 7. Next year, around 6% will be the average for the year. We'll close out next year. So the rates aren't going to change that much. They're going to stay probably in the 6s for next year, which is a normal rate over time. Almost every year since the 70s, interest rates have been in the 6s, and that's where they're going to level out for a while. So
You're
I'm
talking
gonna,
about 2024, 6, right?
2024. Yep, 6. Yeah, I know.
Why?
The worst, to me, the worst thing about interest rates is the amount of deals that are closing. That's not changing much. Right now, we still have multiples at 7.5%, right? So there's still that demand for people to buy. There's just less multiples and less demand.
It's a domino effect.
Domino, yeah. So that's all my time. We have Wells Fargo coming in next. Alright, we have Wells Fargo coming in next, and 3 o'clock, pie eating contest outside. Homemade pies, you don't want to miss it. 3 o'clock.